All right, all right. Hi, everyone. We are getting ready to get started. Are you excited? Are you excited? Are you ready to take this to the next level of financial literacy? This is Financial Literacy Month. Everybody, give yourself a hand for joining because what? You are what? Helping yourself. It's time to build generational wealth, and you starting this month off with financial literacy, April 10th. So give yourselves a hand. We are excited. We are LA South Chamber. And this is the financial wealth team. And yes, yes, yes. We got a bunch of financial gurus on this call, on this webinar that's going to definitely help elevate you, educate you, empower you, and what motivates you. So let's go, let's go. So I want to welcome everyone today. Thank you. You could have been doing anything else on this Wednesday evening at 6 o'clock, and you are here with us, and we appreciate you. So without further ado, I want to introduce our chamber members. So I'm over here working the technology and I'm about to spotlight them. So I'm about to bring, look here, this lady right here, she is the Wall Street guru. You want to learn the Wall Street game, you better come and speak with Pauline. She has the education and mentoring program. So you definitely want to get with her. And then I'm going to bring up none other than Burnell Taylor. Oh my goodness. Now she loved the kids. She loved the kids. Now she loved the adults. But you know what? I love her because she's helping our kids. She helping them to be financially educated. And it's important to be financially educated because you know no one taught us, no one educated us, right? We had to figure it out ourselves being grown. So Burnell Taylor, financial education project manager. So give her a hand. Let me bring up the next person. Now, this person here, you better know that you need in finances. Terry Larry, the CPA. Now she got the taxes locked down. Now she gonna tell you you better be educated because you don't want to mess up with the IRS. But how many of you like to give your money to the IRS? Terry gonna help and teach you how to keep some of that money in your pocket. I love it. I love it. Then we have none other than Karen Foster. Oh my goodness. Yes, she's another guru. Here we go. We're talking about finance, real estate, commercial. Let's go. She's my partner in crime, and I love her. It's just a heart of gold. She's here to teach you in understanding how to leverage real estate, how to leverage your finances, how to know the right loans to get, commercial property as well. So she's going to be help teaching you today. Then we have none other than Oprah. Oprah's coming to the stage because you know what? You building all this financial wealth and you don't have no insurance. What's going to happen to your financial wealth? It's going to fade away. And Oprah is going to bring it today and helping you to understand how to use insurance to definitely cover yourself, protect your family. So welcome to LA South Chamber. And I'm going to turn this over to Oprah in just a minute as I remove everyone from the stage. But give them a hand, everyone, as they leave the stage. Give our financial team a hand. I'm so excited to be a part of the financial team. And my name is Anna Queen Tut. And what do? I love building generational wealth and helping every family I can. So I'm on a mission. I'm on a mission, y'all, because you know what they said? The Black wealth gonna be zero in 2053. That's the problem. That's a problem, y'all. That's a problem. So I'm here. I'm here to make a change. All right, Oprah, you can take it over. Take it over. Take the stage. Take it away from it.
Well, I tell you, Anna has me so excited. I don't know. Okay. Thank you so much, Anna. We are really excited that you guys are with us this evening, and I'm going to head straight to our panelists. But before I do that, I'd like to thank you for being here with the LA South Chamber. I want to thank the LA South Chamber for allowing us to have this platform. We have an awesome wealth team. And without the chamber giving us this platform, it would be really hard for us to, all of us to get our stories out there and help the community the way that we do. So let's give it up for the LA South Chamber for allowing us to be on this platform. Okay, let's start with our number one panel. And I am bringing to you today, starting out, I'm going to read both of these ladies' bios. They're both awesome. They're doing some great things in our community, and they do know their business. Okay. So first coming to you, I have Terry G. Larry. She's our CPA. Terry Larry is one of the less than 5% of the Black and certified public accountants in the U.S. among all U.S. accountants today. Terry has approximately 40 years of tax and financial accounting experience. Terry is originally from Compton, California. She attended a Catholic school in South LA and graduated with a Bachelor of Science degree in accounting from California State University at Long Beach. Terry is a member of the LA South Chambers Advisory Board, the American Institute of Certification Public Accountants, and the California Society of Tax Consultants. Terry has worked with various Fortune 500 companies over the years. She started a small business practice in 2012 in order to educate and help small businesses in the Los Angeles area. Terry works in the individual, corporate, partnership, multi-state, and international tax areas. Terry's primary focus now is tax resolution. She is authorized to represent taxpayers before the IRS. And I don't think we could have anybody better than Terry representing us when it comes to taxes, okay? Moving on to our next presenter, you guys. Now, I must tell you guys, get your pads out, be able to take notes, be ready to take notes, because you're going to wish you had this information either now or in the future. Our next person that will be presenting on panel one today is none other than Karen Foster. Okay. Karen Foster is a seasoned professional, 26 years of experience in the real estate and finance industry. Throughout her career, she has demonstrated expertise in various aspects of real estate, finance, and wealth building. As an accomplished author, Karen has penned to notable works 7 Ways to Build Generational Wealth and Passive Incomes, and an ebook titled Securing Your Financial Future. These publications reflect her commitment to empowering individuals with the knowledge and strategies needed to achieve financial success and security. Karen's contributions extend beyond her writing endeavors. She serves as a co-captain of the financial team, where she undoubtedly plays a pivotal role in guiding and leading others towards their financial goals. Additionally, her certification as a member of the Los Angeles South Chamber of Commerce highlights her dedication to professional excellence and community engagement within the business realm. With her extensive experience, valuable insights, and commitment of financial empowerment, Karen Foster continues to make a significant impact in the real estate and financial industry, inspiring others to take charge of their financial future and building lasting wealth of generations to come. So I'd like to introduce to you our panel one, Terry Foster, and she will be taking the lead here, and then we will hear from Karen Foster coming up. Okay, panel one, you got it.
Hi, everyone. As mentioned, my name is Terry Larry. With the April 15th tax deadline just around the corner, I wanted to touch on just a few tax topics that may help you in filing your individual and small business tax returns. First, though, I'll have to start with a disclaimer. The following information should not be relied upon as tax advice. And you'll often hear that from CPAs and attorneys. First, I'll start with those planning to file returns by the April 15th deadline. If you're planning on filing by April 15th, there are a few things that will help you with your tax filings, whether you're filing your own tax returns or giving information to a tax preparer. Number one, get your documents organized. No tax preparer wants to come in and view a shoebox of tax documents. And if you're preparing your own tax return, that will help you also. So get your tax documents organized. For me, I give my clients an organizer, a tax organizer, and the organizers list items that should be considered when filing a return and documents that I will need to prepare the return. So item number 2, review your documents carefully to ensure all items have been correctly reported. As an example, carefully review your forms 1099. 1099s can be corrected by the payer. So if there isn't a mistake on your 1099, contact your payer and let them know that a mistake has made. Recently with a client, they received 2 sets of 1099s from the same company. So we had to contact the payer to find out which was the correct set. And hopefully both sets were not filed with the IRS. Number 3, check eligibility for tax deductions or tax credits. And I'll discuss the difference between the two shortly. Number 4, considering setting up an IRS online account to securely access tax information, including tax payments, tax records, etc. And in today's world, cybersecurity and identity theft are real problems. So, cyber criminals seem to be able to break into anything. It seems like every day I'm getting a new notice saying your information was leaked by so-and-so. So hopefully the IRS has all of its internal controls place where they will not be able to break into the IRS. Next, for extension filers, if you're requesting an extension of time to file your tax returns, you should consider the items that I just discussed. However, one thing that I would really like to stress is that an extension of time is not an extension to pay your taxes. An extension of time to file is not an extension of time to pay your taxes. If you believe that you owe the IRS, make sure to make a payment with the IRS, with your tax return or with your extension request. If you don't have the money to pay all the tax due, the IRS suggests that you pay as much as you can in order to reduce penalties and interest. The IRS recommends that you file an extension request before the April 15th deadline. An extension request can be requested by filing Form 4868, or a taxpayer can use IRS Free File at irs.gov/free file. I usually file extension requests for my clients when they ask me to do so. And I know the tax law is getting harder and harder, and more of my clients are filing extension requests. If you have a tax preparer, you should also check with your tax preparer just to make sure your payments are being made and the extension is filed. Now, I mentioned previously I was going to touch on tax credits versus tax deductions. A tax credit generally reduces your income tax liability on a dollar-for-dollar basis. As an example, if you have a $10 tax liability and a $10 tax credit, the two will net to zero and you won't owe any taxes. On the other hand, a tax deduction reduces the amount of a taxpayer's income before the amount of tax due is calculated. To illustrate, and just for purposes of simplicity, let's say you have income of $100, deductions of $10, and a 10% tax rate. At the end of the day, using the deduction, you would owe $9. The $9 is computed by taking your $100 of income, subtracting the $10 in deductions, leaving $90 in taxable income. Then you would multiply the $90 by 10%, And that's how you derive your $9 tax liability. Compare this with the zero liability when using a tax credit. There are several tax credits available for individuals and small businesses, including the Earned Income Tax Credit and the Work Opportunity Tax Credit. I'm not going to go through all the tax credits that are available due to time limitations. But if you're interested in learning more about tax credits, you can go online to irs.gov and enter a search term to find a credit that may apply to your particular situation. The IRS website actually provides a host of tools that can be used to answer your tax questions. So just don't be afraid to go onto the IRS website. For those of you who are into AI, you can also perform an AI search for a tax question, but I would strongly recommend that you carefully review the information obtained by AI, because in many cases, the tax information could be incomplete or possibly incorrect. Now I'm going to touch on tax refunds. Many people love to receive big tax refunds. People's like, I got a 5,000 tax refund, I got a 10,000 tax refund. Well, that's really not a good idea. What you have done is just given the government an interest-free loan for the year. And now, if you're getting that big of a refund, you can use that money to invest in different investment properties, different savings accounts. Use that money to help you, not to give the government an interest-free loan. Now I'm going to check to find out how well you were listening to the information I just presented. I'm going to give you a couple of questions, and the first question is a true or false question. And you can enter your information in the chat or raise your hand if you want to, just give that response yourself. Number one, true or false? Filing a request for extension extends both the time to file the tax return and to pay the tax. True or false? Anybody want to respond? Okay, I'll tell you the answer. That answer is false. Filing an extension request only extends the time to file. You're still required to pay your tax in by the due date of the tax return. Question number two, with everything being equal, is it better to have a tax credit or a tax deduction? Anybody want to answer that one?
Tax deduction.
No,
Credit.
it's a tax credit, because your tax credit will offset your tax liability dollar for dollar. The deduction will limit the amount of that you can offset. So going back to my previous example, you would have zero liability with a tax credit and then a $9 liability with a tax deduction. But this is not as easy as it seems, because there are many, many rules associated with calculating tax credits and tax deductions. So be on the lookout. Now, are there any questions?
I have a question, Terry. So some of the tips you share is, can you share the website or any where we can find that, just in case we want to go on our own time and look that up?
Make sure you go to irs.gov, not irs.com, because I think there is a irs.com, but you want to make sure you go to irs.gov.
Thank you.
Any other questions?
Awesome.
Okay.
Thank you so much, Terry.
Excellent presentation.
Thank
Awesome.
you. Thank you so much.
All right, Miss Karen. is up. If you do have additional questions, make sure you put them in the chat. Thank you.
Thank you, Terry. That was an awesome presentation. Good evening, everyone. I am Karen Foster, owner of Trinity 3 Investments, Inc. and Groves Capital. And I help clients build generational wealth and passive incomes through real estate investments and financial literacy. This is inclusive of cash strategies, which is cash. The acronym is knowledge, attitude, skills, and habits, and principles that can be passed down through generations. Let me share my screen with you. There it is. Okay, hopefully you can see my screen. Give me a thumbs up, please, if you can. Okay, great. So the conversation that I'm having with you tonight is basically a recap of what you can anticipate at our upcoming Wealth Symposium on April 18th. And I'm not going to go through every slide, but this is just, a brief synopsis of my bio, as well as my past credentials or current credentials. Now, what I will be talking about tonight is the Great Wealth Transfer, Mortgage 101, loan programs that include down payment assistance, and investments. The Great Wealth Transfer. We are currently in the midst of the Great Wealth Transfer. And actually over the next 2 decades, into 2053, there will be a transfer of wealth from the baby boomers, which are our grandparents and our parents, where the wealth is being passed down to millennials and Gen Xers to the tune of $68 million to $80 million in assets. This includes real estate, businesses, taxes, mutual funds, investments, and cash. Now, the benefits of the Great Wealth Transfer is that the millennials and the Gen Xers, they will be left to settle their parents' and their grandparents' estates. So this is where our financial advisors come in, and they will help these individuals settle their estates. So this will be a good time to speak to the millennials and the Gen Xers regarding different vehicles, investment vehicles that they can invest their wealth in, and to keep the wealth circulating and growing and keep it in the family versus selling off the assets where it can continue to cycle over time and pass down to their children. Now, a part of the Great Wealth Transfer will include real estate, okay? And fastest way to wealth is real estate. You can buy housing, which that's what myself and my partner, Anna Tut, that we present to home buyers. There are mortgages that are available currently for first-time home buyers as well as seasoned buyers. And basically a seasoned buyer is someone who has owned a home before, okay? The first steps to obtaining the mortgage is pre-approval. That's most crucial because you need to know how much home you can qualify for before you start shopping for a home. So what you would do in preparation is get with someone like myself, a lender, and in order to get pre-approved for a loan, these are some of the steps. Now, your FICO score. FICO scores range anywhere from 300 to 850, okay? We also take a look at your income and assets, and we look at your most recent 2 years of employment history, your most recent pay stubs, your tax returns, your bank statements, and any other assets that you have, such as 401ks or pensions or et cetera. Okay. We have programs, this is through my company, Gross Capital, for 1099 borrowers as well, where we will look at your bank statements and your tax returns. And we have programs with 12 months to 24 months of bank statements, 2 years tax returns, and income and assets. Now, if you look to the right of my screen, this is the pie chart and the credit mix. And this is what the credit mix is made up of, which you can see here. And I'm sorry, I can't really see my screen. Let me see here. I can move it down. Okay, here's the credit pie chart. And you see that 35% of your credit consists of your payment history, 30% are your amounts owed, your debts, 15% is your length of your credit history, 10% is new credit, and the other 10% is types of credit used. Okay. Now, loan programs. We have programs for first-time home buyers, which FHA provides 3.5% down payment assistance. Conventional financing is 3%. Okay. Now the 10% that has recently changed, and I'll explain that later. I'll come back to that 10%. VA, zero down. What you will need as a VA borrower is your DD 214, and you would receive your entitlement, and that's your allotment after you are approved for your loan, which tells you how much loan, the loan amount that you qualify for. Okay. We also have USDA loans, which are zero down, and that's in rural development areas. And if you qualify, you can purchase a home 30 to 45 minutes outside of any metropolitan city in the country with 100% financing. Okay. No money out of pocket if the seller pays for your closing costs. Okay. Seller concessions, that's where you ask the seller for assistance with your down payment or your closing costs. Well, your closing costs, I'm sorry, not your down payment, but your closing costs. Okay. So we have FHA, USDA, that's U.S. Department of Agriculture, conventional up to 6%, and VA financing up to 4%. Okay, now let's talk about down payment assistance. I'm sure you've heard all the uproar about the Dream for All program. That's through CalHFA, which is the California Housing Finance Agency. And the Dream for All program just rolled out on April 3rd. And CalHFA, which is a state agency, they are providing borrowers with up to $150,000 in down payment assistance. Okay. Now there are some requirements that are a little different from the last rollout, which was March of 2023, and you've probably heard about that, where there was about $300,000 in allocated funds, but it went so fast. The money was exhausted in 11 days. Well, the guidelines are different this time, because the Dream for All program now does require a lottery. So what you do is you complete the home buyer education class, and then what you do is you get pre-approved with a lender, such as myself, and then what you do is the lender provides you with the pre-approval letter, and then you upload the letter of interest into the CalHFA portal. Now the portal window is opened. It opened up April 3rd at 8:00 a.m. and it closes April 29th at 5 p.m. Now, the caveat with this program is that although CalHFA is giving you up to $150,000, there is a shared component to the program, which means shared appreciation. So any equity that you gain in the property over time, when it comes time to sell or refinance, guess what? You have to share some of that equity with CalHFA. So that would be the money that they lent you, plus anywhere from 15 to 20% of your equity. Now, there is another program called My Home through CalHAFA as well, and it covers FHA financing and conventional financing. Now, the down payment assistance isn't as great. It's 3.5% for FHA financing, 3% for conventional financing. The beauty of this is that there is no shared appreciation. You don't have to pay the money back. And this money can be utilized towards your closing costs. You can ask the seller for concessions, which will help with your closing costs. And CalHAFA also has what's called the ZIP program, which is a 1% loan that can be applied towards your closing costs. LA County also has a program, City of LA, excuse me, has a program where they are offering up to $161,000 in down payment assistance. Now, the requirements for this program are a little more detailed, whereas where CalHAFA will ask you for 2 months of income and assets, well, the City of Los Angeles will ask you for 6 months of income and assets. There is an education class that you have to take as well. And for the sake of time, I won't really dive into it, but if you have any more questions, obviously you're welcome to reach out to me and we can have a conversation. Now I want to talk about investment properties, and this is where the equity comes into place. Okay, now if you are looking to purchase units, okay, units, single family, 1 to 4 property. So let's talk about duplexes, triplexes, and quads. Okay, quads are 4 units. Fannie Mae and Freddie Mac are now accepting 5%. Remember earlier I was talking about 10% down? Well, they reduced it to 5%. So that makes it a lot easier for you to come in with less money down, and you can purchase units. And the beautiful thing about units, and this is something that I always teach to my younger generation, is that you can live in one unit and rent out the other units. And the other units, you can also utilize the income to help you qualify for the mortgage. And you're building generational wealth. Somebody else is paying for your mortgage. So you will have either little to no money out of your pocket to apply towards your mortgage. Now, there is a vacancy factor of 25%, but this is how you start to build wealth. And then the units will propel you into the next property and the next property and the next property. And then this is something that you can pass down to your heirs and keep it within your families. Now, that's the end of my presentation. And if there are any questions, we will open up the audience.
If you have any questions, please raise your virtual hand so we can call on you, or you can put them in the chat. And let's give Karen a hand. She did an awesome job. Come on now. Come on. Let me see those virtual hands. Let's go. I know you got some questions.
Karen, I'll definitely start making an effort to introduce clients to you.
Thank you. Appreciate you.
Awesome. Woo.
Thank you.
Referrals are
Only
great.
yesterday I was telling someone about purchasing a 4-plex.
Beautiful.
So I will
Beautiful.
definitely give you his number.
Well, I thank you. Appreciate you.
All right. Do we have any other comments, questions? Okay, Denise.
Yes, good evening, everyone. What is the credit score necessary to apply for a house?
Well, I will say for the Dream for All program, you need a score of 680. But if you are going standard FHA and conventional, you can, you have programs starting from 620, 640. Now we do have programs at 580, but now I will tell you with a 580 FICO score, your interest rate would be high. So the higher your credit score, the better terms that you'll receive.
Got it. Thank you.
You're welcome.
Hi, this is Terry. I have a question. Do they count Social Security benefits as part of your overall income? Or would you
Uh,
just have to have like 1099 or W-2 income?
Well, you can utilize Social Security. You can utilize your, like I said, I'm just using this as an example. If a person is on public assistance, uh, foster care, that income cannot be discriminated against. But now with your Social Security income is, I mean, if you're, I believe it's pre-taxed because you've already paid into it over the years that you were working. So if that is is that your main source of income?
No, for me, I have, my tax practice, and I've kind of dwindled down on that. So I'm not making quite as much as money as I used to
Mm-hmm.
because I've decided to be more of a full-time granny.
Oh, okay.
So,
Well, I tell you what, we can actually have a conversation, a personal conversation about that.
okay, thank you.
You're welcome.
All right, any other questions? These are great questions, everybody. No more? Okay, awesome. Let's give
Thank
Karen
you.
another
Excellent
hint.
information.
Thank
Let's
Excellent,
you.
give
excellent information.
let's give her another great hand. Awesome, Karen. All right, who needs to take it over? I think Vernell is it's time for you to come to the
Yes.
stage.
Yes, thank you very much, Anna and Karen, for delivering that awesome presentation. You know, we just heard from panel 2, they talked about tax tips and lending investments. So now, you know, I'd like to introduce our third panel, I'm sorry, our second panelist. That will be Oprah Price and Anna Tuck, and they're going to cover, Oprah will be covering insurance solutions, and Anna will be covering generation wealth. So what I'm going to do before our panels get started, you know, we got to keep this mission going, as Anna said. And I'm going to go ahead and introduce them both. I'm going to start off with their bio, and I'm going to introduce Oprah Price. So Oprah Price, Jean Price was born in Quainton Nestle in Cotton Plant, Arkansas, where she spent her formative years before embarking on a journey that would shape her career and life. In 1962, her parents made the bold move to California, seeking new opportunities and experiences. After settling in California, Jean attended Charles W. Birch Elementary School in Compton, California. Pursuing her education with determination, graduating from Crenshaw High School, woo woo, and later in LA at LA City College, where she majored in sales and marketing. Armed with her academic credentials, Jean embarked on a professional journey that would span decades. With passion for helping others protect their most valuable assets, and themselves, Jean founded Insurance Solutions, services where she served as an insurance broker. For her impressive 35 years. Her commitment to excellent and unwavering dedication has earned her trust and respect of clients across the states, Georgia, Washington State, and her beloved California. Beyond her thriving business, Jean is deeply involved in her community and serves on executive boards of the Los Angeles South Chamber of Commerce. Her leadership and advocacy efforts have made a lasting impact, further cementing her reputation as a pillar of the community. In all aspects of her life, Jean Price exemplifies resilience, integrity, and a relentless drive to empower others, as she does. With her vast experience and unwavering commitment to service, she continues to make a positive difference in the lives of those she serves. We welcome Oprah Price, and our next panelist is Anna Tutt. And I would like to introduce Anna Tutt. Anna Queen Tutt boasts over 16 years of experience in the real estate industry. Sorry, I'm trying to make sure I read this right. Adeptly assisting sellers, buyers, and investors with their diverse needs. As the CEO of Queen Tut Enterprises, she leads a multi-faceted company catering to real estate, commercial, lending, tax services, and has spearheaded numerous real estate workshops and estate planning seminars alongside her dedicated team, aiming to empower homeowners, buyers, and individuals in building generation wealth. Yes, generation wealth, and enhancing financial literacy. Anna leadership extends beyond her business ventures. She has served as the president of the Consolidated Board of Realtors, a premier network of Black real estate professionals. Additionally, she has held roles as first and second VP of the Consolidated Board of Realtors, Secretary of Young Realtors LA Division, and contributed to community outreach efforts for the Veteran Association of Real Estate Professionals, and a dedicated member of various professional organizations, including the Los Angeles South Chamber and Inglewood Board of Realtors, and actively participates in nonprofit initiatives striving to affect positive change in her community and advocate for equitable housing practices. Now I would like to introduce our panel two, and I will hand it over to Oprah Price.
Thank you very much, Renelle. I want to say one thing. I'm saying we are wearing these glasses, okay? We are wearing these glasses.
Yes, we are.
It has been awesome. A lot of wealth of information tonight. I want to thank you for having me tonight as well. This is my information here, my numbers there as well. You can see that I do have a wealth of companies here that I represent, and trying to make sure we protect our most valuable asset, which is you. Thank you. Next slide. I want to ask you guys, what's wrong with this picture? Can somebody tell me what's wrong with this picture?
The line is too long for the Beyonce tickets versus
Right.
with life insurance is so important. So why they stand in line at the Beyonce ticket?
It's like it's called we kick that can down the road, and we want to do the things that makes us feel good and that's fun. We don't want to talk about the real issues that are at hand. So this is an example of people will go out of their way to buy tickets to a concert, but they will not take the time to sit down and handle their own needs and the things that they need to have in place that's important to them. Next slide, please. That is my favorite slide, by the way. Protecting your most valuable assets. One of the things we have is when you're protecting what's dear to you, whether it's your health, your wealth, having a plan in place is very important. Planning, being prepared on what ifs might happen. I can always tell people that taxes and death is certain, and they will come no matter what. So you always have to be prepared for the things that we're not expecting. Caring, that means caring for yourself, your family, and your partners. Next slide. Protecting your most valuable asset, which is you, is very important to individuals as well as entrepreneurs and business owners. Just a few things that when we talk about protecting yourself, it's not just financially. The risk that we face as small business owners and entrepreneurs is the risk of getting sick. We get stressed out. We worry a lot. The financial risk could be debt. It could be bankruptcy. It could be the fear of losing your business. It could be the fear of losing a loved one. And those things do have you becoming financially, in debt. So that's important. Emotional risk, anxiety, depression. I know that as a business owner, we wear a lot of hats. We do a lot as far as running our businesses. So protecting your most valuable asset, which is you, because if there's no you, there is no business. You're the one that have to keep it going. It's a gift that was given to you, and it's up to you to make sure that that business run the way it should. Other risks, public perception. brand. We worry about our brand. We worry about damages. So there are a lot of risks when you look at, protecting my most valuable asset. It's not just in the finance world. Okay. Strategies for self-protection. I was, encourage you to prioritize your self-care. That's number one. When we say your health is your wealth, it is true. Your health is your wealth. Without your health, nothing happens. And if, some of you have experienced being in a situation where you've been sick, you've been in a situation where you can't run your business, you can't do the things that you really want to do, it's not easy. And it is something that you really need to take very serious, because your health, in order for you to maintain your business, to continue to do what you're doing, you have to be healthy. So I encourage you to exercise, nutrition, sleep is important. Setting boundaries. We need to have a balance. Some of us go to extreme, and I know for myself, I find myself wearing all these hats, and I work up until the hour sometimes. But I also have to sit with myself and talk to myself and say, hey, you need a break. You need to take time out. You need to balance what you're doing. And it's okay to say no sometimes. Managing stress, burnout. That's what we're talking about. Financial protection, how I can cover my income if I'm unable to work. How can I do that? And that's another a way of protecting your income and protecting you. You must have things in place that's going to be there for you when you can't work, when you've had an accident, when you've been in the hospital. You have to have things in place that's going to continue to put income in your pocket, because you know what? Life goes on and your business is important to you. So I always encourage uh, clients to have at least 6 months to a year set aside as an emergency fund. And when I say emergency fund, I'm talking about accidents, car situations, the pipes busted at the house, those kind of things. And those are programs you can go to when you really need to. You don't have to go into your other savings to pull out to handle those situations that are happening, that could happen every day. So make sure you build an emergency fund. You need to have that on hand for yourself when those things happen. Investments in insurance, health, disability, and liability. There are programs out there where you can make sure your health is taken care of. I can't tell you how many people just walk around daily and they don't have health insurance. I don't know how they do it. Okay. You have to have health insurance, because that means if something major is happening to you, you're going to have to seek care. Disability, if you become disabled, you have to make sure you have some of those funds are set aside, or a program that's going to kick in when you can't work or you can't go to your office, you can't make it. Liability, we'll want to make sure that we don't set ourselves up for lawsuits. That our liability will help you as far as your business, the building you're in, and all of those are are programs that you should have in place. Okay. Life insurance is the right plan for me. You have to, what life insurance should I have? What is going to work for me? And making sure that you do that. There's so many programs out there on the market, but everybody is different. There's no one size fit all. That means what we try to do is tailor programs going to meet your needs, your budget, and your particular situation. That's what life insurance is all about. Am I making the right choice? Am I headed in the right direction? Am I making the right decision? So when it comes to you protecting your most valuable asset, those are the things you need to ask yourself. Okay, you need to be on point with that. And it's all about you first. You can't go out there and run a business until you have most of these things lined up in order, so that when that time comes, I know that I can put my hands on it and I'm taken care of. Okay, next slide. I talked about life insurance. There are various types of life insurance out there. We look at talking about mortgage, college funds, business expenses, income replaces, placement, taxes, and creating an inheritance, which is going to be legacy for your family. We want to make sure that we leave our legacy to our family and our kids so that they can carry on what we have started. Final expenses designed for planning a burial, funerals, that type of life insurance is available for those situations. So there's a lot of choices out there to cover your assets. It just depends on what's right for you. and what programs you want to have for yourself. Next slide. At this point, that is the end of my presentation. I just wanted to make sure it's quite and to the point. This is a segue to our April 18th event coming up, which is going to be at Magic Johnson's Park. All of the presenters you have on here tonight will be at our event. So make sure you go online, register, and I hope you're able to walk away with something that's going to resonate with you tonight. And if not, make sure you visit us at our next event. Thank you. My name is Jean Price, and this is my information that's available to you as well. Thank you.
Awesome job, Opal. Thank you very much. Life insurance solution is so important. Now I'd like to turn it over to our next presenter, Anna Tutt, and she's going to talk about generational wealth. Okay, Anna, take it over.
All right, awesome, awesome. Thank you for that wonderful introduction, Vernell. I am just trying to get the tech side, move everybody out the spotlight, and I will get started. Hi, everyone. Thank you once again, Vernell, for that wonderful introduction. Thank you for everyone who is joining today, and I know it's been fabulous information so far. Put in the chat if you agree with me that it has been great thus far, so put in there that you are enjoying yourself. So I am going to talk about building generational wealth through real estate. It's very important. You heard Karen talk about ways, and she pointed out a lot of great avenues, but I want to talk about mindset first, because one of the things that is very important is that you have to believe that you can own property. You have to believe that you can build generational wealth. It's the mindset. Many times we hear the naysayers. They say, well, you don't have no money. You've been renting all your life. My mama rented, my daddy rented, my grandma rented, so we all gonna rent. No, change your mindset now. So everybody say, change my mindset. Put in there, I'm gonna change my mindset. I am building generational wealth. I want you to put it in the chat because I want it to resonate in your mind, and I want you to believe it first, okay? I can sell you a house, I can tell you the steps, but here's the thing. If I put you in a house and you don't believe, what's gonna happen? Put in the chat if you know the answer. What's going to happen? 9 times out of 10, you're going to lose it, right? I don't want that. I want you to understand how and get your mind ready of building generational wealth, of changing your mindset. So one of the things that you have to do is do your affirmations every day. Many of us, we talk about, oh, I'm going to be a millionaire. Oh, I'm going to have this. But talk about, I see it, Linda. Thank you. I am building generational wealth. And somebody else said, I am changing my mindset. These are affirmations that you need to tell yourself in the morning. Look in the morning, like, you know, when you see yourself in the mirror and you say, hey, hey, gorgeous, hey, beautiful. I want you to say, I am building generational wealth. Start saying that and teach your family, teach your kids, teach your grandkids, okay? Next thing is budgeting. You got to have a budget. How many of you live on a budget? Put in the chat. I want to see who have a budget. You know where your money going every month, or are you not? This is important because Oprah said it. She had the picture of Beyonce. Everybody made sure that they got that money and what? They went to that high concert. Is she building generational wealth for you? Is she giving you some money? No. I see some crying. No. So that's why we have to change the mindset. We want all the things that is not building us wealth. And in our community, that's what happens so much. We go get the shoes. Like I'm reformed. I had to go to Shoe Alcoholic Anonymous. I am reformed, okay? Why? Because I used to buy a whole lot of shoes. But what happens? The shoes fade away. What do? They dry rot, right? So where did my money go? In the what? Trash. In the trash. And when we're renting, where's your money going? In the trash. Because you helping someone else build generational wealth when you can build generational wealth. And Karen talked about it, about buying units. I always teach my clients, buy units first if you can, because the same amount that you're going to put down for up to 4 units, 3.5%, what you're going to put down for a single family. I want to teach you, this is a business. This is not just me buying property. This is a business. No one teaches us that this is a business. We think this is our forever home. How are you going to capitalize on that? So that's why you got to have a budget. How much money do I have to afford a house? How much can I pay in a mortgage? What are my bills that's going out every month? Everybody get a piece of paper. When I speak, I like to have some writing. Get a piece of paper. Someone write it in the chat for me, as I said. Say 10%, and I'm going to say tithes. 10% savings, 10% investment account, and 70% I live off of. Why am I telling you the 70-30 rule? Many times we get our money, and how much of the money you spend? 100%, correct? No one has ever told us to live off of 70% and save 30%. If your goal is to purchase units, if your goal is to purchase a house, if your goal is to purchase a commercial building for your business, whatever it is, that's what that investment account is going to do. That savings account, when you have a flat tire, when you got to put a new engine in your car, like I had to get yeah, I had to get something new, whatever it was. You got to have that money put aside. So if you don't, then you're going to go use your credit card, right? Swipe, you back in debt. So it's very important that you have these accounts. I go to church, so I'm going to put tithes. So I'm not going to apologize for it. That's who I am. You might not want to. But I want to say this. You might not be able to do 10, 10, 10 right now. If you do 1% and gradually increase up to 10, start somewhere. It's important to start somewhere. Look at your money. And this month, we are already April 10th. I want everybody tomorrow. I want you to track your spending for 30 days. I want you to see where your money goes. I had a friend of mine. I told her, I said, I want you to track your money. She seen where her money went. She said, Anna, I am sick. I also had her to calculate how much rent she paid. So rent is high, right? So somebody put in the chat, if you pay, let's do it easy, $3,000 a month. 3,000 times 12 is how much? Put it in the chat. Yeah, I'm the person that's gonna make you work. Come on. Come on, come on, come on, come on. You can't be sleeping over here. Y'all should know that math. What's 3 times 12? Thank you. Thank you. 36,000, not 3,600. We wish. 36,000. So for the whole year, you just paid 36,000 to the landlord. You just made me rent. You my renters, you just made me rent. Times that times 5. 36,000 times 5, and tell me what's the answer. 36,000 times 5. I'm looking for it. I'm looking for it. Come on. Y'all gonna eat up my time. They're gonna be like, you got to get off the stage. $180,000 is what you paying in 5 years. So some of you have been renting for 10, 20 years, right? Do the math. So 180,000, you could have paid on your equity. Oh my gosh. Did I say equity? Yes. So I paid $180,000 to the landlord. I'm not getting none of that back, right? But if I paid it into my mortgage, I'm building my income. I'm building my equity. So if I need to pull that equity out and go buy some more properties, or maybe I need to go buy a building, or maybe I have another investment idea. I want to flip properties. I can pull the equity out of my home to what? Have another project fund, even my mortgage. Don't never pull out equity to pay off your credit, to pay any bills. Do not do it ever, ever. That's a no-no. If I find out you do, I'm going to get my bill. Why? Because that is not building equity. Always think like this. This is the mindset. Whatever you need to do, you need to make sure that you have an investment that's paying for it. And I know Pauline gonna be talking about that Wall Street, and she's gonna help bring it home. But you always want to have something paid for what you want to do. If I want to go get a Tesla, I need to have an investment paying for that. How do I do that? So that's why you got to think, when I say real estate, I want you to think this as a business. I didn't think like that. I had units some years, I don't know how long ago, and we let family members live in there. We didn't capitalize on it. We up there being nice and helping people. So then we also have to put money with the units. We should have capitalized because they should have been paying what our units and our mortgage. You got it? So think outside the box. I need everybody to think. And I need you to tell your families, go home and tell your sister, your brother, your mama, everybody, sit at the dinner table and talk about, you know what? I heard it today. We need to change our thinking. Every time we want to go to the brunch, can we afford that? Is that 70% of my money? I want to go to the Beyonce concert. Is that 70% of my money? I'm gonna make her rich. How much money? How much is she worth? And how much are you worth? Oops. I think I done dropped the mic. Drop the mic. We got to change our mindset, y'all. Okay, I can help y'all. What did I say? I can help you buy a house. You hear the dream for all. You got all these down payment assistance programs. But if I keep spending the way I'm spending, I'm not playing with y'all. I just told you earlier, Black wealth is gonna be zero in 2053. That's a problem for me. So I'm on a mission and I'm going to be unapologetic about it because no one pulled Anna's coattail to say, stop shopping, stop buying them shoes and go buy some doors. What is my goal? I want 20 doors. I don't need 20 pair of shoes. I've done that, did that, write a book about it. I done bought 20 pair of shoes in one whop. You guys, you hear what I'm saying? Changing the mindset. I'm not going to buy $100,000 a car where I get a $1,000 note and I don't have a house. That don't make sense because the car is going to fade away. But if I had a house and I was paying $1,000 a month, what my wealth is going to build? We showed it here, 180,000 in 5 years. Man, some of us say, "Dang, I can't get to 180,000." I just showed you because Karen talked about units, right? So I just gave you a calculation. That's for one. But what if you had a 4-unit building and you got 3 tenants paying that amount of money? That's $180,000 times 3. How much is that, somebody? Someone talk to me. 180,000 times 3 is what? I'm about to show you how to make yourself rich. You'll be time to wake up. Yes, $540,000. Do you guys hear me? In 5 years, that's what you can make. What? You can be a millionaire. This is how we got to build generational wealth. Okay? Y'all got me? Are y'all following me? Thumbs up. Thumbs up. Am I clear? Am I good? Okay, let's keep moving. Let's keep moving. There you go, Vernell. You put it in the chat. So I just open your mind to think, dang, I could really make $540,000 if I had some units. Then here, I want you to even think a little closer. Somebody got a single family home. People don't think about this. Everybody need a place now. You got 3 bedrooms, and it's just you and your husband, or you and whoever, and you got 2 extra rooms. Rent those rooms out. $1,800 a piece. Think about it. Somebody do the math. $1,800 times 2 is how much? I'm changing your thinking today. Anybody? That's $3,600. $3,600 a month that you can collect. You guys see how I'm showing you this is a business. I have a friend, she's a real estate agent, and she said, I'm an empty nester. She had 1 roommate she started with last year. Now she done got 2. They help paying her mortgage. Now she got extra money in her pocket. Y'all talk about a retirement. This is a retirement that don't fade away because the 401k, you don't even know if your money gonna be there. In Social Security, we really don't know, right? This is how you leverage real estate, and this is how you build generational wealth. And you don't do this by yourself. You have to teach your children, your grown children, your young children, your grandchildren. You need to have financial family conversations. You should be sitting at the table with your family. Look here, we need to have this conversation. We're going to talk about budgeting. I have 2 extra bedrooms. Girl, you better rent them out. $1,800. She getting $1,800. She told one lady $2,000. I'm just giving you a nice figure. But we need to have those conversations. And if you look at it like that, I just showed you guys how to make some money. $3,600 times 12, you already did the math. And think about that a year and then 5 years, that's just on a single family. So I showed you how to make money on the units and a single family. So if you turn that and you leverage and then you take that investment that you're making and buy more property. Now, here's the key that is very important. I said to sit down with your family, sit down with your kids, sit down with your grandkids. Show them in making these decisions. I used to get mad at my mom and my dad because I love math. They would have me do the bills. They would always have me go make orders. I had to do all this. But know what? Now I am so grateful. I'm so thankful that they prepared me for where I'm at now and understanding it now. That's why I'm saying teach these kids. They on the games 24/7, but they don't have no skills of how to spend, how to save money. I got a granddaughter. She want me to take her to Target all the time. Girl, if you don't save some money, teach them. Show them how to live off of 70%. If they get $1, break it down for them so that they can know they get $5, they get $10. Break it down, but have that conversation. And when you start buying the properties, put your homes in a trust. If I have to go to another probate court, I'm gonna cry. That don't make no sense. I don't, that's a problem for me to see the probate courts, the attorneys, the judge, the court making money off your investment that your parents, your aunts, or whoever owned the property have had to blood, sweat, and tears. And we don't have our homes in a trust. We say we got a will and you think that you're good. No, a will is no, you need it in a trust. And here's another caveat to having a trust. You get to dictate what your family is going to do with your legacy. That legacy can be passed down from generation to generation to the generation. You can say you cannot sell this home. You can have a trust account where it can fund your family. Hey, you can pay them $500 a month if you set it up right. These are things to think about. We talked about insurance. We talked about commercial. We talked about taxes. This is stuff to structure. This will help you on your taxes. So you have to leverage the real estate. Okay. Any questions so far? Am I going too fast? How much more? How much time? Where's my timekeeper?
We gotta move on.
Yes.
Okay, I gotta move on. So I'm gonna wrap it up. I'm gonna wrap it up. She said I gotta move on. But I want you to understand, I want everyone to say, I am building generational wealth. I am an investor. I am a homeowner. I want you to say that and I want you to believe it. And even if you do own a home, I want you to leverage it. And if you want to sit down with me, you can. I can put you in a house. I can put you in units. I can put you in anything. But my thing is, I got to make sure you educated because to lose it is a problem for me. I'm tired of seeing our community losing property. I'm tired of seeing our community. Dr. Rosie said it well. She said on Broke Street. We're going on Broke Street every day. We need to be on Wealth Street. We got to change our mentality. Terry, you had your hand up, and I'm gonna move on. Yes, I can recommend a living trust attorney. That's Dr. Rosie. I'll send you the number. Was that your
Okay.
question? Was that your question?
Terry, you have to unmute yourself.
Yes, and I had put it in the chat too.
Okay, I got it. Any
Okay.
other questions? Because they telling me I got to move on. But hopefully I gave you some information that you can use. I can talk to you about the ABCs of home ownership. I can tell you what's the steps of buying a house. You don't need to know that. You're gonna know that when we're in the process, but you need to know how to get there. You need to know that you can get there. Everybody, whatever barriers you have, I want you to get it out of your head. And I want you to understand that you can get there. If your credit is bad, that's all right. We're going to educate you. I have a credit counselor. We're going to educate you. Do you understand? If you
Okay.
don't have the down payment, we got you. Whatever that barrier is, I want you to get it out your head and say, I can
Okay.
own. I don't want to hear nobody saying that the properties are so high. When our parents bought property with 17% interest rate, that barrier needs to go. Opa is telling me I got to go. So everyone, thank you so much. I appreciate you.
Thank
Reach
you,
out to
Anna.
me.
Thank you,
Anna, you're a
Anna.
born speaker.
Let's give it
Anna,
up for
you're a
Anna.
born speaker.
Yes.
She
Great
is
presentation, Queen.
unstoppable. Okay, how about that? Unstoppable. Okay.
Okay,
Go ahead.
ladies and gentlemen, now we are
Oh.
moving. We are
Go ahead.
moving
Anna, you're a
on.
born speaker. You're a
Thank
born
Yes, you
speaker.
are.
You got a gift.
Thank you, ma'am.
Now we will move on to our third panel. We have two awesome ladies who are presenting. We have Miss Pauline Giscombe and Vernell Taylor. Now let me share their bios with you. Pauline Giscombe is passionate about education and financial development. This is evident in Pauline's extraordinary life and entrepreneurial endeavors. After secondary school, she studied at the University of Hertfordshire, London, England. Pauline welcomed new humans earthside as a registered nurse midwife. She later worked as one of the London's first Marie Curie nurses, providing palliative and hospice care to aging patients. Pauline realized her desire for financial independence and became an accomplished cosmetologist and independent insurance agent secured by many of London's elite. Eventually, Pauline's quest led her to Los Angeles to fulfill the American dream. Initially arriving in Los Angeles, she attended Loma Linda University. However, her family called on her to move closer. Pauline moved to New York City with extended family. There, she furthered her nursing studies at Stony Brook University, New York, to acquire additional skills and best practices in nursing. While caring for a 90-year-old hospice patient, Pauline was further inspired towards generating wealth. The patient expressed pity for Pauline as she worked so hard as a nurse to care for the patient. Yet the patient claimed to make more money in my sleep than you do every day as a nurse. You work so hard. That moment was a catalyst for Pauline to pursue a better understanding of generational wealth and financial independence. Pauline seems to have a gift in securing employment among the wealthy. Returning to Los Angeles, Pauline was welcomed as a cosmetic nurse with the famous surgeon, Dr. Stephen Hoffman, Santa Monica, California. She later accepted at the Wright Home Center, Beverly Hills, California, and director of nursing. Pauline was essentially a nurse by day and a meticulous student of the stock market and foreign currency by night. Pauline has completed numerous trade academies and wealth building seminars. A few of her accomplished trainings are with Forex trading, with Abe Kaufman's stock training, Can Slim investing system, with William O'Neill and the Wealth Academy. These systems provided Pauline with a framework. However, she has dedicated the last 20 years of understanding the stock and currency markets. During this time, Pauline developed a 5-step trading system to trade both foreign currency and the US stock market. Pauline is passionate and committed to teaching financial literacy to assist families in constructing personal retirement plans and their children's educational funds. Pauline's goal is to teach her 5-step trading system to aid individuals and families in creating a $5,000 a month passive income via investing in US corporations. She has been teaching her system for over 10 years to economists, physicians, real estate agents, nurses, educators, etc. Her Saturday mornings are dedicated to reading her subscription of Barron's. She faithfully reads her weekly reports to stay abreast to the market sentiment and economic data. Besides teaching her 5-step trading system, Pauline maintains an active social and philanthropic lifestyle. She is an active member of Better Investing and a lifetime member of the American Association of Individual Investors. Pauline is also a member of the Eagle Women's Club, the Women's Club of Hollywood, and the LA South Chamber of Commerce. Lastly, Pauline is the CEO of the Circle of Happiness, Inc., an organization to support and propel her vision of financial independence and generational wealth for others. The gift that keeps on giving. Now, let me briefly share our second panelist, Vernell Taylor, Financial Education Program Manager. Vernell Taylor is a native of Los Angeles, California, and graduated from Washington Preparatory High School in 1984. She earned a bachelor's degree in business management from the University of Phoenix in 2003. Vernell began her career at Union Bank in 1989 and started as a bank teller. Transitioned to U.S. Bank in 2023. Vernell currently supports the U.S. Bank Student Intern Program under Corporate Social Responsibility as the Financial Education Program Manager. Taylor has more than 30 years of banking experience and now with a focus on teaching financial literacy, seeking new curriculum, building new relationships in the community. Vernell is a powerful force in the workplace and uses her positive attitude and tireless energy to make a difference. Vernell has a passion in giving back to the community endlessly. She volunteers with Junior Achievement, Legacy Ladies Inc., Pan-African Film Festival, educational student training, Los Angeles South Chamber of Commerce, America Saves, and Lula Washington Dance Theater for the Tiny Tots. Vernell received her certificates of completion in the Board Leadership Program at the African American Board Leadership Institute, April 8, 2017. Successfully completed the Multicultural Women Executive Leadership Program in 2023. She currently serves on various boards in the South Los Angeles area. Outside of work, Vernell enjoys cycling, walking, yard work, family, and quiet time. Now, ladies and gentlemen, our next presenter, Miss Wall Street herself, Pauline Giscombe.
Hi, I'm Pauline G. Skill, Wall Street educator and mentor. Quote, Steve Ballmer earned $1 billion in passive income per year from his ownership of Microsoft stock. Repeat, so you can clearly hear $1 billion in passive income from his ownership of owning Microsoft stock for doing nothing. The secret of the 1%. Are you aware that real wealth is a secret? Do you know why it's a secret? Because the world is built for workers. So, unless you have someone to actually guide you, you're totally lost. In 2012, Facebook came public at $40. One share of Facebook $40 investment is now worth $500 for doing nothing. I've also developed a wealth party. The idea of a wealth party is for you to have fun, because so many people love to have fun. So you're having fun and learning about investment. And the goal is that first, you learn about investment and then you have fun afterwards. Plus, most importantly, wealth party for your birthday. The guests are told no presents, only money. The money that is collected will be used for investment. So you'll have a party, collect cash, and the cash will be invested. Life story. One of my buddies in investment invested a great deal into mainly energy stocks. And this is a true story. And it's happening right today. While he was up and about, we used to talk about stocks. I can't tell you how many shares he owned, because that's not important. The most important thing was to share ideas. When he became frail, it was the dividends that was used to pay for his care for 24/7. He passed away about a month ago, and now his wife now has a caregiver. Not so much that she's that frail, but she needs companionship. So she's now enjoying the same money from the dividend investment to pay for her caregiving. And when she passes away, her sons will inherit this money. So what my goal is to educate on building passive income of $10,000 a month. The goal is to educate you on how to build grow, manage, and protect the $10,000 dividend portfolio, investing in companies such as Walmart. $1,000 invested in Walmart in 1970 is now worth $17 million for doing nothing plus dividends. We're just talking about growth and appreciation of $1,000 invested in Walmart. And I like to talk about companies that most of us know. $1,000 invested in Walmart in 1970 is now worth $17 million for doing nothing. And please go look that up online. Another success story is McDonald's. We all go to McDonald's eating and drinking and having fun, not knowing investing in Walmart shares could have made you very wealthy. And apart from that, $2,500 invested in Walmart shares is now worth at least $20 million. And apart from that as well, you'll have at least $1 million in dividends only. Is $1 million a year too much money? And the beauty about this as well, this money will move from generation to generation. And the beauty about these dividends, you could use it to purchase real estate. You could purchase insurance. You can go on holiday. So investing, the money that is kicking off from your dividend could be used to purchase real estate, that fourplex, the insurance, or to have fun. So I always talk about building first a foundation. And once that foundation is built, you are set for life. I declare Sunday a day of financial freedom, where we should first have a Sunday plan. The Sunday plan is 10 a.m. church, 1 p.m. lunch, 3 p.m. financial planning. We should be planning about our real estate investment, our insurance planning, our tax planning, and last but not least, our planning to buy into American businesses so we could live a wonderful life, an abundant life of love, health, and wealth. Money is just a tool. But do you know how to use this tool? And that's what I'm trying to say. It's no use just hoarding money, hoarding money. To have a really wonderful life, you need family, you need love, you need health. If I had money from the ground to the ceiling and I had no one to assist me, the money is useless. But if I had my loving family, I had good health, and I have to know how to make more money today and tomorrow, would that be wonderful? So let us now start planning Sunday as Financial Freedom Day. Let's pass the word around. Sunday is Financial Freedom Day, a life to build an abundant life of love, health, and wealth. Thank you.
Thank you so much, Pauline. Do we have any questions for Pauline from the audience?
There's no questions.
Okay. Okay. Thank you so much, Pauline. That was an awesome presentation. And now we will move on to our final speaker, Miss Vernell Taylor. Take it away, Vernell.
I gotta unmute myself. Okay, awesome. Thank you very much. All righty, I know we on time, 7:30. My presentation will be 10 minutes. I'm gonna go ahead, share my screen. And in the courtesy of everyone, just let them know that we're gonna be a little bit behind time. We'll go a little bit over. Thank you. All right. Yes, we must plan our money. We must create that habit. Yes, we are on a mission. So your path to wellness begins with smart financial habits. Setting out the path to financial wellness is a life-changing experience that includes developing wise decisions and financial practices. Moving to the next slide. What's a habit? You know, habits can be positive or negative. You can form them consciously or unconsciously. Just like brushing your teeth, you get up in the morning, that's a perfect example that we have a habit. We don't even think about it much, you know, it put any thought to it. You might do, good at brushing your teeth and then you start thinking about stuff like, what do I have to do for today? What's the next thing on my list? What's on my pending list? Other things, what you have to do. So what if saving for your money, your future was that simple, right? What if if your budget was as predictable and easy to follow as your daily routines, such as brushing your teeth? And approximately 40% of our daily behavior is on habits. Moving to the next slide. How to build a smart financial habit. We talked a lot during this call, great information delivered, changing that mindset, planning, budgeting, family, very important. So, you want to save for a rainy day. And it's aimed that you save for at least 3 to 9 months of worth of your total expenses based on your circumstances. Managing your budget, an ongoing account of your household income and expenses. If you're budgeting a habit, if you're making a budget a habit, you'll have a lot more control over your money. Access to credit, as here you want to access to your credit, getting your credit score. Checking your credit score regularly 2 or 4 times a year. And at US Bank, you can get that free at usbank.com /free credit score. Also from 3 credit bureaus a year. And reduce your debt. Resolve to pay your credit card in full every month. You want to create that habit. When you use your credit card, just pay it before that 30 days and you can reduce that debt and you can save money as well. Track your online security. Set up account alerts so your bank can notify you if someone tries to change your address, phone number, or maybe even sends monies from your bank account. That's very important, that security. Use strong passwords on your mobile devices, websites. Stay up to date on the common scams that are out there. Here on the screen, there's a QR code. You can take an opportunity to, scan with your phone camera where you can learn more smart habits that Union Bank offer on our website. All righty, I'm just giving a quick second just in case somebody wants to scan with their phone. Okay. And then the next slide, identifying your goals. There's 3 questions: why, when, and how much, right? There's 3 questions. So 1, why? When you connect your goal to a purpose and put that purpose in words, it is more powerful to you and others because you're going to talk about it and it's a purpose. So that goal is more valuable to you. Building that emotional connection will help you stay focused on that goal. When, right? When do I want to achieve this? So you want to make sure that you are working towards that goal and when that goal will be fulfilled. You want to make sure that you're going to achieve it. It could be a short term or a long term. How much? How much will it cost? Not every goal is a financial component, but many of them do. If you're saving for a house, right, building generation wealth, your biggest expense for your upfront will be your down payment. And there may be other expenses of knowing how much when you're planning or setting that habits. It could be a vacation, establishing your business. It is important to know your goals and why it mattered to you. Moving to the next slide. Choosing the right approach for your goal. Identify that timeline again and being on spot on that completion date. Know how much you can afford. You want what makes sense to you. How much can you afford? Know your expenses at the end, and how can you afford this, right? All the moving parts of your finances. Stay within your means. Very important. Stay within your means. Don't exceed. You know what you can afford. And access your comfort with risk. Also, a strong communication. I know Anna mentioned that. Sit down with your family, sit at the table. Let's talk about your finances. Communication with your family, including the kids, very important. They need to know as well, right? Taking the steps of breaking down those goals, what we can do and what we can afford. And finally, take advantage of the resources that are available to you. As the LA South Chamber of Commerce, we have a lot of resources, and we can lead you to other resources because we have partners as well. So take advantage of that's available to you. Moving to the next slide quickly. I'm trying to be as quick as I can. Sorry. Let's see, yeah. So developing those saving habits again, there are very important to develop those saving habits, right? There's uninstall those shopping apps that will slow down your spending. There's behavior things that we deal with, and we want to make sure that we're making those right choices and we developing those saving habits. There's small amounts of effort that makes you less likely to do something as a friction hack can be. Set up a future self for activities like meeting up with a goals coach or a financial advisor or a trusted partner or someone to help you to be honest with your goals and your expenses. Stay emotionally connected to your goal and stay motivated. Create a vision board. When you create that vision board and you see and you know what you want to do, it comes to fruition. Have photos of your goals. And when when you hit those goals and those milestones, celebrate. We have a travel club. We celebrate, we go travel. So you want to celebrate when you met those goals. Put your money in a long-term savings, very important. And just real quick, short-term, long, medium goals, for emergency fund, you have regular savings. For money market, those are for large amounts. You add to over time, maybe for vacation, as I mentioned. The CD, time deposit accounts. Money you have now and you don't need right away. Don't put your emergency money away for something that you want to earn interest on. You're gonna lock it away. Maybe you have a long-term goal. Maybe you want to get married and develop your business. And develop that, start creating a rainy day fund here, money that's set aside for unexpected expenses. We have additional resources. What does a budget sheet look like here, right? You can go at usbank.com /financial wellness, retrieve that budget worksheet and understand it, see how it works for you. And then also for students, I'm not sure there's any students on the call, but we also have chances for our high school students to win scholarships, right? So you may want to contact with me or visit usbank.com scholarships to get started and scan here with your phone. There's opportunity where they have financial lessons to chance to win scholarships. Moving to the next slide. Thank you very much. I know it's really quick. Wow, I had to be last, but thank you anyway. No matter what question you have, there's no big or small question. We are available to meet you by phone or person. I could be your resource. Going out and teaching financial education, and to our nonprofits, our schools are very important. We have a commitment to deliver financial education. Here, usbank.com /book. That's the end of my presentation. Thank you very much. This was an awesome webinar, and I hope all taking notes and make sure you utilize our resources. Thank you.
Thank you so much, Vernell. Let's give it up for Vernell. Thank you. Everything was great tonight. I want to say thanks to all of the panels that we had here tonight. All of our speakers, everyone did an awesome job. Great information, and we're very excited about taking this panel in person. So make sure you guys go online. That if you're a guest tonight, go online and register for the event on the 18th. You will get a double dose of and even more of what you got tonight. So thank you, panelists, again on behalf of the financial wealth team. At this time, I wanted to make sure, are there any questions in the chat? There are no questions. Okay. Hopefully you got everyone's number if you wish to talk to one of our panelists tonight. At this time, I'm going to turn it over to Terry so she can say goodbye to everyone. Thank you, Terry.
Oh, you're welcome. In closing, we would like to thank everyone for taking the time out to attend the LA South Chamber of Commerce Financial Teams webinar. That was a mouthful. Our Wealth Symposium and Expo is on Thursday, April 18th from 10 a.m. to 2 p.m. at Irvin Magic Johnson Park, which is a beautiful location. Registration for this event is required. Please visit the lasouthchamber.com website for registration information. Many of the presenters on today's webinar will be presenting and giving more detailed information in response to questions. They will also be able for maybe a one-on-one question answering session. Again, thank you for attending, and hopefully we will see you on the 18th. Good night.
Good night. Thank you.
Good night. Thank you for joining us, everyone.
Good night, everyone. Thank you for your participation and thank you for joining us tonight.
Thank you.
Great